Shares of Duolingo are crashing, and investors are asking me, where do you step in and buy the dip? On today's video, I'm going to show you a little used indicator that is going to show you exactly where the buyers and sellers are likely to show up in shares of Duolingo. So you're going to want to stick around for that. Now, we also can draw clues from similar stocks that have seen multi-year support levels collapse, just like Duolingo's did yesterday, and some clues and things we can learn about the future. This all comes as the company announced their Q3 earnings, and Wall Street is slashing the price targets by 30 or 40%. As usual, Wall Street late to tell you when the shares are going to crash. That's why the technical indicators are so important, because there was actually clues that this stock was headed for a breakdown. Fundamentally, things have changed over at Duolingo, the CEO indicating on the conference call that they are going to improve their courses. And while they improve the courses, users do grow, but it'll take a while for that to happen. So he's putting a damper on user growth. There's also a lag to monetization, which is a fancy term for the company making money off those users. That is because it takes some time for those slowing group of users to subscribe and pay the company money. That is why when you are on social media and people are posting graphs that only go straight up to the right about things like free cash flow yield, you have to understand what the CEO said, that the investments might impact profitability in future quarters. Now, the good news is this company has a track record of when they invest in new courses, more recently chess, that it becomes the fastest growing course that they've ever had. In fact, it's growing faster than any course that they've had previously. Fundamentally, things are really good over at this company. They can afford to invest as they are profitable at today's pace, and based on guidance and outlook the company provided on their conference call, the company should stay relatively profitable, although the growth not likely what investors wanted. That is going to be putting pressure on the company's operating cash flows and operating profits going forward. Now, let's look for clues of where Duolingo could potentially find footing as shares are down over 20% today. There were clues that Duolingo was set for a collapse. That is because before earnings, we were sitting on a multi-year support level, both from an uptrend perspective, but also you'll notice this level right at $260 held multiple times for Duolingo. I want to show you how many investors believed this area at 260 was going to hold. A little known indicator on TradingView is something called the fixed range volume profile. You snap this on your chart and it shows you exactly where the heavy buying and selling of the shares occurred. And you'll notice that coincided pretty close to where the support level was with Duolingo. Now, these support levels are critical because I want to show you a couple of other stocks where that level has broken. Lululemon, more recently, had a clear area of support in this 240 to 250 range. Once that broke, we were all the way down to 160. You might recall United Healthcare had a multi-year support level at 427 break, and we went all the way down to $240 on that one. And going back a little ways, Enphase Energy had clear support at about $112 per share. Today, shares are $30, with only one of these three stocks actually being able to climb back, and none of them have climbed back to the area of support. That is the first thing to understand about Duolingo. Yes, we have broken through this key area of support. We have crashed on shares. It is going to be difficult for the company to not only get all the way back to the 250 range, but actually push up and above through that. We know that both technically, I'll show you another indicator here in a second, but also fundamentally as well, with the CEO saying that the user growth might stall just a bit and the amount of money that they make off those users also going to impact the financials. Now, where do you step in and buy the dip on Duolingo? We move back to our fixed range volume profile. you want to put that on a wider area of the chart, it's going to show you a very interesting thing. Look at where all the buyers previously with Duolingo stepped in. It's actually right at this 189 to 190 level. So if you're stepping in and buying the dip of Duolingo, this is a very good sign. In fact, you have pretty clear support level where investors have stepped in the past between this 119 level and up to about $225 per share. There should be some demand for the shares in this area, and it would be likely from a technical perspective for shares of Duolingo to chop around in this range for a significant period of time. Now, to protect yourself to the downside, if you don't want to wake up another day and watch this stock collapse another 30%, because it can happen, you definitely want to have a stop loss somewhere in the 120 range. And if losing another $70 per share on your investment sounds like a little bit too much, well, what you want to do is wait for Duolingo to maybe continue the momentum down and buy this potentially at a lower price in the 130s to 140s. Then you're only risking a smaller move to the downside before you want to get stopped out. You want to get stopped out at 120 because there's not really clear support for the shares until you get back down into the 70s and 80s with this one. And if you don't believe that type of price could happen, I'll bring up examples of Enphase Energy, which was once a $300 stock. Now it's $30. Lululemon was once a $500 stock. Now it's $160, and there's no signs of it turning around anytime soon. Where do you buy the dip with Duolingo? It's actually about where the shares are right now, all the way down to about 119. Just understand that after you break these key resistance levels, it's going to take some time and some significant momentum from the business in order to get back through there. It's going to be a long haul with Duolingo. I don't think you need to rush in and buy all the shares that you want today. You can accumulate this over time in this area of consolidation. Should be a good long-term investment if the company's courses going forward continue to perform as well as the ones they've released in the past. That was Duolingo's Q3 and chart analysis. We'll see you again soon.